How's it going, everyone? It's Sam. I want to go through really the only reasons to sell right now, why you would want to sell, maybe even sell everything, depending on your own situation. But to be clear, I don't think that's a great idea. I want to go through why that is. I'll give you some updates too. We have some big things happening over the next week. So we'll go through that. We'll go through what you need to know now going into Monday. If you don't mind, hit subscribe so you can see future videos just like this. If you want to go to the Bitcoin conference, there's a link underneath the video and you get 10% off when using my code or when clicking that link. So definitely check it out. Also, if you do want to trade crypto, we'll talk more about that towards the end of the video, but there are links underneath the video to WEEX, to BTCC, to BitUniX, and to Blowfin as well. You can start trading, and all of them have great bonuses right now. None of them require KYC. For example, on WEEX, you can get up to you can get part of 800,000 USDT, just depending on how much you trade and depending on how profitable you are as well. So definitely check this out underneath the video. Then there are deposit bonuses at Blowfin and at BTCC right now, 10% deposits. Now, the market for Bitcoin doesn't look too bad. Honestly, over the last month, we're down 5, 6, 7%, something like that. But really, we've been trending sideways all month, just stuck between 75,000 and 90,000, just stuck back and forth, back and forth, back and forth. But we're holding pretty well compared to the S&P 500, which year to date is down 13.4%, and from the peak is down about 17.4. If we look at the QQQ, we are down even more than that. Let's go peak to trough, down 22%. So full on bear market crash, whatever you want to call it, 22% from the peak. Keep in mind, this is just over a 1.5 month period with over 10% down just in the last 2 trading days or 3 trading days. So there is peak market fear right now. We do have some economic news coming this week, including CPI and PPI. So be on the lookout for that. That could be interesting. If that comes in higher than expected, yeah, be ready for some red. Right now, hedge funds are facing Lehman-style margin calls due to the market crash triggered by President Trump's tariffs. Record number of layoffs expected in the coming weeks. Now, this is coming from Jacob King. He's usually a pretty bearish poster, but I have been hearing more and more about these hedge funds. From the Bitcoin therapist, Dan Hillary says, just talked to a couple of TradFi buddies. People are hurting bad, not good. Jeff Walton says, leverage hedge funds are getting some margin calls this weekend. Hearing the same. Yeah, so again, maybe some selling pressure on Monday. This is normal. When we see a big market crash, some hedge funds, some institutions are much too leveraged, and they're trying to get good returns, and they're trying to outperform the market. So how do you do that in an up-only market? Well, you go leverage. I'm not saying you should do that, but that's what they do. So when you see a drawdown, yeah, sometimes they do get margin called, which can cause them to add extra selling pressure. On the tariff front, though, apparently 50 countries have already reached out to Trump to negotiate new trade deals. This is according to the U.S. National Economic Council director. We're getting more and more news of various nations that are trying to implement zero tariffs. Elon just called for the U.S. and Europe to establish a zero tariff system and a free trade zone. This is just from the last day or so. And obviously Musk, some people say he's on the outs with Trump. I think it's kind of like a mutual, he's going to step back here soon. But I think Trump still probably listens to what he has to say, whether you like Musk or not. I would not be surprised if we got to one of these zero tariff systems in the next couple months. They are saying, though, that the tariffs are going to stay in place for days or weeks. Days and weeks is what they say, according to Lutnick. So interesting that they're even just saying for days and weeks. That makes it sound like, again, this is like a short-term scenario. This does not seem like something that's going to be here for a year or 2 years. At the same time, we're seeing peak fear. You can see that, like, extreme fear on the market. This is the stock market, actually. 4 on the fear and greed index. Let's see if we've ever seen lower. We haven't seen any lower in the last year. I've never seen a 4 on the fear and greed index here. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put versus call options, extreme fear. You can see almost the same number of put and calls. Market volatility, went up. Extreme fear. Safe haven demand, extreme fear. Junk bond demand, extreme fear. So everything is showing the market is highly scared. You can see here the global long short ratio went down to 162% or so. This is capitulation, the lowest on record long to short ratio. So people just getting extremely scared. But there are always reasons not to invest. Keep that in mind. There are always reasons. Going back to 1950-ish, Korean War, then Cuban Missile Crisis, JFK killed, Vietnam War, Nixon resigned, stagflation, Black Monday, 18% mortgage rates, Gulf War, Soviet Union, savings and loan crisis, dot-com bubble, Y2K, September 11th, Iraq War, housing crisis, Brexit, COVID. They're all just tiny dips when you look at it zoomed out. Yeah, any time you bought in here, it doesn't matter if you bought, in 1981 or 1982, it doesn't matter. You were happy that you bought in this time with enough time. Right? It can get scary, and I realize, if we had a crystal ball, we would buy it the specific best time, right at the very bottom, but no one can tell where the bottom is. And I actually see a lot of people, a lot of crypto people, a lot of stock investors being very fearful. There are only a handful of people that I see that are really buying heavily out there, and that tells me it's probably a good time to be buying. Everyone's saying, no, just calm down, wait until the VIX comes down to reinvest in the market when there's more, when there's a better idea for what's coming in the coming months or years, right? When we can tell what's going to happen with these tariffs. By then, though, the market will probably already jump, right? When there's less uncertainty, the market does better. So I could see at some point where the market is up 5%, maybe not 10%, 5, 7, 8% in a day if the tariffs go away. Of course, we could always have some other outcome. We could always see the markets drop another 5% a day. I think it's been since COVID that we've seen a 10% drop over 2 days. But again, that's typically a great time to be buying. I'm not saying to go all in or anything like that, but I also wouldn't be freaking out in this market and trying to sell. In my mind, there are only a couple reasons to sell, right? First, if you need the money back sometime soon, which you shouldn't be investing with money you need sometime soon anyways. Like if you're looking at, $1,000 and you're saying, hey, I need this at the beginning of next month for rent, I would not put it in this market because it could fall down, or it falls down a little bit, you freak out, you sell at a loss, and then it goes back up. So I would not invest anything that you need anytime soon. Think multi-year horizon. If you're overextended, if you've been using margin, I might consider selling. And I'm talking about margin. I do talk about leverage trading on different platforms. I treat this differently though, because how I use this is I use a few percent of my crypto portfolio, and I use it to do long positions on low leverage. Here, I actually went more aggressive, 7x, but we got in at a very good price. Other positions, I open up at 2 to 4x leverage, and I just ride them out. They're really attractive to me right now because if you go 3x leverage from 82,000, that puts your liquidation price, in the mid 50,000s? So there, we could drop a lot, and even then you could add more margin. That's why I like using not 50% of my crypto portfolio, but a handful of percent, like 10% or less of my crypto portfolio to go long the market. So that way I can add more to the margin as well. If we keep dipping, I can continue to scale in as we fall down, and I don't get liquidated that way. I don't consider this overextending compared to, there are some people though that are using like their stock portfolio and getting 50% margin or 60% margin on their stock portfolio, which puts your liquidation price only maybe 30, 40% lower than what it is right now. And that's on your entire portfolio. So I'd be careful about that. And I'm not even telling you to sell if you're in one of these situations, but this might be a reason to sell, right? Don't get too overextended in this market. You can dollar cost average, you can dump money in the market, but don't go and leverage everything you have. The other reason you might want to sell, tax loss harvesting. A lot of people don't understand this. The Money Cruncher actually explains it, but basically tax loss harvesting is the process of selling your stocks or ETFs at a loss and buying back a similar but not identical stock or ETF immediately. The loss then becomes tax deductible. You can deduct up to $3,000 of losses per year on your taxes. The other side of it is, let's say you have $100,000 of losses. You can use that to offset gains as well. So if we rebound and you take profits on some crypto or some stocks and you already tax loss harvested $100,000, you could use that to offset the gains as well. And you can carry this over. So you could have 30 years of losses or 33 years of $3,000 losses. So this is another thing that you might want to do. And it depends on your situation. It depends on where you live and all that kind of stuff. And this might not be applicable depending on where you live. But this is something that I've done. This is something that I've done within the last couple of weeks. I've tax loss harvested. So yeah, if you want to do that, now might not be the worst time to do it. I do this actually pretty regularly when we see dips. If I see two different stocks that let's say I like two stocks equally, right? And both of them fall down a significant amount, you could sell one of them and put it into the other. Of course, you're more concentrated, but you can take the losses on that sell as well. So just something to think about. You could do that with crypto as well if you want to reposition your portfolio and you're down on some positions. But those are really the only reasons I can think of to sell, right? Again, if you need the money back soon, there's no certainty we're going to be out of this dip in the next week or month or anything like that. If you're overextended, let's say you're at risk of margin calls, or if you're trying to tax loss harvest and then you're really just repositioning. But I do not think this is a time to panic. I don't. We could fall further, but what do you need the money for? What are you going to do? Sit it out, get in at the perfect time? No, you're probably going to wait too long. There's going to be less uncertainty, but then there's going to be still some uncertainty. So the market starts to move up and you're like, oh, there's going to be one more drop. And then we just continue up to all-time highs. People always like to quote that if you miss like the top 10 days of the market over the last 10 years, you'll underperform and you'll get like a, whatever it is, like a 50% return instead of a 200% return. I don't typically like that because you could also miss the 10 worst days. And then let's say, it's a coin flip whether you miss the 10 best days or 10 worst days. So I don't really like using that too often, but we've already seen some of the worst days. So I think it actually makes more sense now. We've seen two of the worst days. Let's say we see 2 days that just counteract that. We're right back. We're right back within spitting distance of all-time highs. Bitcoin's held up very well too, which is really surprising. Of course, we could always dump, right? Let's say tomorrow morning goes poorly and we see a dump in the S&P 500 or the NASDAQ again, and we see another 4% move, 3% move. Who knows? Bitcoin could go down to the previous low of 77,000, or we could go even below that, right? That's possible. So I wouldn't bank on us holding here forever if we continue to fall down on the NASDAQ and the S&P 500. But that's why it's important to dollar cost average. That's why it's important to take care of your life outside of what you're investing in and make sure that you still have income coming in. Of course, do your own due diligence. I appreciate it. Let me know your thoughts on this underneath the video. You can check out the links to Blowfin, BTCC, WEEX, and BTCC, and I'll see you in the next one. Bye.